Okay. We've done 5 questions. Let's go to question number 6. Hot area kind of question. Select whether each of the following statements relating to life cycle costing are correct or incorrect. Friends, let me tell you my experience. Life cycle costing is not supposed to be a difficult task. I mean, unless you don't know about it at all. Correct, incorrect, all must be selected correctly. What do you think about the statement?
The first one is incorrect.
Life cycle costs are accumulated from the time that the product is launched. No, in fact, they are accumulated from the time of conceiving the product. The time that the product is launched, we've already done even research and development, all of that. So life cycle cost is not accumulated from the time that the product is launched. Before then, so you are right to say incorrect. Yep. Number 2 cannot be correct. Life cycle costing assumes that a product's costs are incurred evenly throughout its life cycle. So every year we spend the same amount of money. Every phase of the production we spend the same amount of money. That's absolutely false.
The third one is correct.
Okay, the maturity phase of a product is when the rate of growth in demand starts slowing down. Yes. So in maturity stage, we still increase sales, but the speed with which it increases slows down. That's maturity, because lots of people are in the market fighting for the few customers that are there. Friends, this market, these examiners know how to rewrite these sentences another time so that you read and you think it's the same thing, but it's not the same. That's why you need to give time to think. So when you go and spend all of the time in section C, when you come here, you just be rushing, and definitely you get it incorrect. Yeah. Last one.
It's correct.
Costs in the decline stage include product retirement and disposal costs. That's correct. All 4 must be ticked correctly before you score too much. Variances. No calculations required. Oh, I cannot copy this. Paste. Okay. I didn't want to take a screenshot, but I'm forced to. The company budgeted that it will sell 20,000 units of its main product based on an expected total market of 250,000. But it has the capacity to increase production if necessary. Demand for the product is price elastic. So customers are responsive to prices a lot. However, after JCO produced its budget, one of its competitors became insolvent. Which of the following is this most likely to give rise to? The examiner is testing your understanding of sales price, market share, market size variances. Well, with a sales price variance, you are selling at a higher price than budgeted. So you earn more money coming from price. That's a favorable sales price variance. Is the situation described above going to lead to that? With a market share variance, you're going to have a bigger share of the market. Favorable, bigger share of the market.
Yeah.
Yes.
My answer will be B. And the
B.
reason is that,
Yeah.
yes, I'm looking at from the angle that maybe we are two people producing to the same market
Yeah.
and we are holding shares
Yeah.
despite our size.
Yeah.
But at the end of the question, is telling us that the competitor is becoming insolvent.
Yeah.
And I have idle capacity.
Yeah.
So originally, I'm not going to increase in size, but I'm just going to use my extra capacity to cover for the insolvency of the other person.
Yeah. The
So I'll
insolvency of
grow
it
in.
because, yeah.
Yes,
Mm-hmm.
it's not coming. So I'll grow in shares, not in size.
Okay.
So my
Okay.
size will
Great.
be the same. I'll use my extra capacity
Great point.
to grow.
Let me just make one correction to your submission. The market size is not your size, it's the size of the market. So if the competitor goes insolvent, that doesn't mean we'll have more customers in the market. So market size is out. So you are right to rule out market size. I'm just correcting that for you to say that when you say you grow in size, you will not grow in size. What will happen is that the market size means the market becomes bigger. The market doesn't become bigger because a competitor has left the market. We are likely to have the same customers. But you are correct to say you go for a favorable market share because you sell 20,000 out of 250,000 in the market. If a competitor goes down and you have the capacity to increase production, you can sell more. So your market share goes up. Favorable sales price variance, no, because customers are price elastic. They respond quickly to changes in price. So if you increase your price because your competitor has gone out, you will lose out on the market because customers are price sensitive. So this is a classic question testing your understanding of the things you learned how to calculate. You know how to calculate price elasticity of demand. The examiner is not interested in that here. You learned how to calculate market share, market size variance. He's not interested in that here. But of course, if you have forgotten, revise them with questions. Right. So I'll go for option A. Oh, did I say O? A. Sorry. We mean favorable market share. I'll go for option what? B. That's what we said. All right. Please refresh your minds quickly on all of this, all right? The breadth and length of the syllabus will be covered in objective test questions. Okay, you're going to take another bitter pill. We've not done relevant costing yet, but let me talk to you about it. Relevant cost is costs that will change as a result of a decision. These costs are generally not relevant. Past costs are also generally not relevant. NB co-manufactures products AE, which has the following cost card. So we'll make a profit of 35. Each unit of the AE takes 1 hour to manufacture, and production utilizes all the available capacity of NB Co's labor and machine. So it means that there's no spare capacity for labor, there's no spare capacity for machines. NB is planning to make a new product, the LH, but would have to divert labor and machine time from production of the AE. LH uses the same amount of material and labor as AE. Friends, although we didn't do relevant costing, we saw a bit of this when we did transfer pricing. Because transfer pricing also uses relevant costing techniques called opportunity costing method. They want to make a new product, LH. LH uses the same amount of material and labor. So the relevant cost of producing LH will be made up of materials, 50. It will be the same cost as AE. Labor, 70. Variable overheads, 25. Each unit of the AE takes 1 hour to manufacture. Is somebody making a submission?
The variable overhead is 20.
20, all right. Each unit of the AE takes 1 hour to manufacture. And production utilizes all the available capacity. So you see, if you are using 1 hour, it means that currently the contribution you are making per unit of AH is, AH makes a profit of 35. So let me carry that 35 and add back the fixed overheads of 25. In other words, let me recalculate the contribution of AH. 200 sales minus material 50 minus labor 70 minus variable overheads 20. It will give me the same answer, 60 in 1 hour. And they use the same resource. So if you divert the labor, there will be lost contribution. The same loss contribution of 60 will be lost. That's relevant cost then. If I'm making product A, product LH, the total relevant cost is the marginal cost of making it plus the loss contribution because I am diverting production from production of AH to produce LH. So I'm losing that 60 in 1 hour. Is that all? Each unit of the AE takes 1 hour to manufacture, and production utilizes all the available capacity of MB cost, labor, and machine. MB is planning to make a new product, the LH, but will have to divert labor and machine time. When labor is diverted, I guess they are also paid, but that will be too much here. I'm having a look at the answers. 50, 70, 20. That's how much? 140 plus 60, 200. That's the maximum I'll get. I'll go for option B. There was something that was coming in my mind that when labor is in short supply, the lesson is, apart from the 70 you pay them another 70 again. That's the theory about it. So I was about to add the 70 to 200 to make 270, but that would be too much for the options. I don't know, but I'll go for option D. I might have lost 2 marks. I don't know, but I think that's it. $200 will be the relevant cost. As usual, when we finish, we'll check. If you have not watched the recorded lecture on relevant costing, that's obviously a bitter pill for you have taken. But please watch it and then learn something and add to this. Theory of constraints in throughput accounting. This multiple choice. Which of the following statements is consistent with the theory of constraints? Can you try to rule out things and minimize the options available to you? Exam technique. C is completely ruled out. Think about C. Non-bottleneck resource is something that you have a lot of it available. You want to fully utilize it, you'll be wasting time and resources spending money on it. So non-bottleneck resources are not fully utilized. They are subordinated to the bottleneck. So I'm going to rule out C. Any other thing to rule out so that I'll be minimizing the options for me?
Yes, D as well. D should be ruled out.
Conversion costs are kept to a minimum. Conversion, that is D. Non-bot. Did you say D for Daniel?
Yes.
Okay. Non-bottleneck processes working at maximum efficiency will minimize work in progress ahead of the bot. Of course, that's just a repetition, more or less, of C. So D is also ruled out. We are left with A and B. And please, my focus is not to give you already produced answers, but to get you to be thinking about it the same way as we are doing in the exam hall. So you rule out C and D. Now you are left with A and B. It's easier to make a choice here than have 4 to choose from. Well, the aim is to
the answer is B. The answer will be B.
Yeah, the aim is to minimize throughput, cannot be, because look, you want to maximize throughput, you want to maximize contribution in the short term. So the aim is to minimize throughput, no way. So B. Each of these things you are doing, you are building up 2 marks. So you see, limiting factor analysis here. What are the limiting factors? There's a question, a section C question I'll be solving with you, CSC code. In that question, you needed to work out the limiting factors in spreadsheet, take decisions about the optimal production and all of that. I'll be doing that with you, definitely on the revision course. What is the limiting factor? What are the limiting factors for next month? They should be pretty easy if you are studying limiting factors, right? Single product, total production cost 70. The build-up is given. Budgeted demand next month is 5,000 units, 19,000 kilograms of material, 11,000 labor hours, and 16,000 machine hours are available. Look at the options: material, machine, labor, material, machine, labor. So you've got to test all of them. Compare what is required with what is available. Material. How many do you need to produce a 5,000?
19,000.
Say again.
19,000.
That's what is available. Material available is 19,000. How many do you need? How many do you need? How many of that do you need? So
12 divided by 3.
$12 divided by $3 is 4 kg.
4 kg.
You need 4 kg to produce 5,000 units.
Yes.
So you need 20,000 kg, but you have only 19,000 kg. This is a limiting factor. At this point, please be smart. Material is definitely a limiting factor. So option C, option D are out. Exam technique, because I'm left with option A alone, don't spend the time on labor. Just go and analyze machine time. Spending the time on labor at this point is a waste of your time. So machine time available or required, $21 divided by $7, 3 hours to produce each of the 5,000. We need 15,000 hours. Question says we have how many hours? 16,000 machine hours are available. So if I need 15 and I have 16, this is non-limiting. I'll select answer option A, sorry, B. Material is the only limiting factor. I did not spend time analyzing labor because I believe in what I did with material. But for the sake of the classroom work to be complete, let me analyze labor also. Next time, it may not be this. $32 divided by $16 is 2 hours to produce 5,000 units. I need 10,000 hours of human beings' time, human effort. Question says 11,000 hours are available. Again, if I need 10,000 to meet demand, by 11,000 are available, I have more than enough. So this is non-limited. So that confirms it. But exam technique, once you find material and you look at the options, why do you spend time calculating for labor again? Unless you are not sure about what you did for material. Yeah. All right. There are many more of these questions. You see, when you are revising for the exams, by the time you solve a question like this and you want more questions, go to the study hub, quiz questions. That chapter on limiting factors, solve all the questions again. That's how you prepare for the exam. Don't use these last days watching videos alone. No, don't do that. Watch videos if you want to recap knowledge and quickly go back to work and solve questions yourself. My favorite topic, variances. Anytime I teach PM, my favorite topic is variances. But these days, it doesn't come up a lot. So I am narrowing down my emphasis on variances in class. But hey, you saw we did vegan the last time. Big question, section B, 20 marks. Material yield variance. I'm sure revision point. Let's recall material type. You and I have gone through column 1, actual quantity at actual mix at actual price. Column 2, actual quantity at actual mix at standard price. Yield, I'll think about column 3, actual quantity at standard mix at standard price. Then I'll think about column 4. Don't worry about spellings. Nobody sees this in objective test. Standard quantity at standard mix at standard price. We make household cleaning products, the Scream, using 3 materials. At the end of March, there was a total adverse material usage variance of 1,002. The following information also relates to the product in March. Material B, C, D. All right. The actual quantity at the standard mix. The standard ratio of mixing materials are 35, 45, 20. What's the total? 35, 45 is 80 plus 20, 100. So the actual usage, 400 plus 600 plus 200, 1,002. The bowl should take 35 over 100 of the 1,002. The co should take 45 over 100 in the mix of the 1,002 actual use. The dough should take 20 out of 100 times the 1,002 actually used. So that's how the 1,002 is spread. We call this actual quantity at standard mix. Now value this at the standard prices of 22 per liter, 25 per liter, and 30 per liter. I'm beginning to suspect there's something that is wasting time here. You're going to waste time there. Column 4, the standard quantity at the standard mix. So 35, 45, 20, we were not given the, just a moment, guys. Just one moment. I want to make the numbers for the 35, 45, 20, when they go in. All right, Tahiru, I've seen your chart. All right, all the best. See you later then. All right. I'm looking at, oh, this question is on waste, but look at it. There was a total adverse material usage variance. Let me see something here. We know, revision point, that the material usage variance is what is split between material mix variance and material yield variance. That's the theory. I wanted to try something here. If the usage variance was 1,200 adverse, and I'm being asked for the yield variance, now it's difficult, it's impossible to work out the standard quantity at standard mix, because, you know, if you tell me the standard ratio of mixing materials is 35, 45, 20, you should also tell me what this 35, 45, 20 will give me as output, so that I can compare the actual output, what it should have used. You've not given me that, so I need to go about it another way. And this time, I need to work out column 2. Why I'm working out column 2 is I want to find out the mix variance, so that when I have usage variance and I have mix variance, I can just do a subtraction to get the yield variance. So you see, column 2 will be, this is a difficult question, or not difficult, but time consuming. Column 2 will be actual quantity at actual mix at standard price. All of this, you are doing it on paper in the exams. So all things being equal, it will be quicker for you. The actual quantities we used $400 at the standard price of 22. We actually also use for the C, you are looking up there, 600 times the standard price of 25. We also actually used for the D, 200 times the standard price of 30. So I want to rather change my mind. Friends, I hope you've seen what is happening here. What's the total? 6 plus 15 is 21 plus 8, 29,800. And this one here, I need my calculator. $29,940. The mix variance is standard mix. We should have spent $29,940. Actual mix, we did spend $29,800. So we saved, what's the difference? We saved $140. So the mix variance is favorable. So I can just work out the yield variance. 140 favorable plus what will give me 1,200 adverse. There will be a mathematics play here. Let me do 1,200 plus 140. I need the yield variance to be 1,340 adverse. 1,340 adverse. So that when it is added to the mix variance 140 favorable, I'll get the usage variance 1,200 adverse. So yield variance balancing figure in this equation, which is answer option 1,340 adverse, answer option B. C, I wanted to calculate the yield variance by comparing column 3 to column 4. That's what we learned from the classroom. But in getting column 4, I realized I couldn't get it because if you tell me 35, 45, 20 is a mix, to produce what quantity, you've not told me. So it will be difficult to crunch those numbers. In fact, it's impossible to crunch those numbers. So I've got to ask myself, why is the examiner giving me the usage variance? He's giving it to me because he wants me to remember that usage variance is the mix and yield variance together. So if he gives me the usage variance, let me try to work out the mix variance. So I can now work backwards and get a yield variance. So this is the way I want to get a yield variance rather than going by the traditional method of comparing column 3 to column 4. Friends, if you ask my opinion, that's a question that will waste everybody's time in the exams. So this is not one of the questions you want to do early, right? You flag it for review and come back to it later on. Any questions, guys? I've got 4 minutes. Let's answer this hard body question. Hard body, nothing to crunch. If you know, you know. If you don't know, you leave it to chance. If you are lucky, you can get it right. Which of the following methods will be most effective in ensuring the security of confidential information? Syllabus section A. A company-wide password. So we have information. There's one password used across the company. Everybody knows it. This cannot ensure the security of confidential information. Everybody knows it. So it cannot ensure the security of confidential information. keeping copies of files at a different location. So we have files, we have copies of them, we keep them somewhere else. It cannot ensure the security of confidential information. People will have access to it wherever they are. The only thing keeping copies of files at a different location does is that if we lose the original, we can always get a copy. Just like you keep copies of things on your computer and then keep on your external drive also. This is just to ensure that in case you lose it, you get it. It doesn't get you to ensure the confidentiality of it. No. Do I know dial-back security? If you are not sure, ask yourself. Range checks upon data entered. You are entering data. They say date of birth, DD, MM, YYY. So date, that's day, month, year. If you turn it upside down, they'll tell you have not filled a space. That's a way of ensuring that people fill in the right information. It doesn't ensure security of confidential information. Because of that, I'll select dial-back security. Well, what's dial-back security? To be honest with you, I'm not too sure about it, but it sounds like something for me. When I was doing a double verification on my WhatsApp and on my email accounts, I had a security check that says to me, if I want to access my information on a different device, let me do something. So probably they'll send me an SMS on my phone to ensure that I was the guy who was trying to change my password to Facebook or to WhatsApp or whatever. Or they give me the option, should they call me back rather than send me a text? I'm sure that's some kind of dial-back security. It secures your information, confidential information. You cannot have, I mean, if you're accessing my Facebook account somewhere else, I should have a text message or call back from Facebook saying that somebody wants to change my password. Am I the one? That's a high security thing. Friends, time is up. Let's check out. Come back for our last round of 40 minutes to end the session for this morning. So let's come back and then I can explain more.